that material information for those 3 pending issues that had just been ongoing now for the last 2 months, that news will be put out literally the next day, because we want it out in the public domain. Of course we do. Okay, next question. Dan, does Huobi know we may open the two-way street to onboarding? Okay, so we have had, as I tried to allude in my previous comments, Dan, we have had, I've always had pressure from these entities, those and others that you're not aware of, for us to provide our banking license to onboard for the purchase of cryptocurrency. Okay, so yes, like we've had, because we have the licenses to allow it to happen. I've already gone through and explained why I've been reticent towards that. The fact that we have the central bank coming to us, and also regulators telling us that, hey, are you going to be, or are you currently, is a tacit recognition. And so we have taken the decision to put it out there that we could be receptive to that two-way street that you're referring to, Dan. But it's recent. This last week, we spoke about it internally. I read through the questionnaire that came from the central bank. I asked a few questions with relation to that questionnaire. And as far as I am concerned, that is tacit recognition by the central bank that they are clear that entities such as ours could ostensibly be involved in the acquisition of crypto through our license. Otherwise, why would they ask us who we're processing for, right? So anyway, yes, they are, and the others are aware that we're likely to open that particular door. Moving on, Michael. Update on Million Bridges revenue. As you know, I cannot discuss anything about numbers privately, even in this particular AGM. We are happy with Million Bridges. They're moving ahead. We want to start providing updates again. If you all recall, I was steadfast in providing updates for December, January, and February. And that was supposed to be ongoing, by the way. December, January, February, 2019, 2020, January, February, we started to put out monthly updates, which would logically, if that advent hadn't taken place of COVID, would have continued throughout the period of time and would have included things like Million Bridges and Sendity and other entities. So yes, I mean, I think that it's clear for shareholders that our concept as management is that you know as much as we can tell you, in terms of, without going into audited financials and things like that, at least to give a concept of where these things are going. So I can't speak about it on this particular call. We are sensitive that shareholders need an olive branch. They need to see what's going on with these businesses. And to a certain extent, I tried to cover some ground in that news release on the 20, when was it? On the 22nd of November, just to give you a heads up that the recommencement of travel, recommencement of VCC, these are significant advances, because we've literally been without any revenue from these 3 revenue streams since March 2020, like zero. It is unheard of in the commercial world that just something happens like that, but we're all aware of what happened. So expect us to start providing that information again. And I guess for you to get an idea of how our mind works as management is we've already done it in the past. We've already been forthcoming in that way. But just there's only ever been basically since March 2020 until now. November was the first month when this started picking up. And where Sendity and Million Bridges are concerned, of course we could have spoken about those small amounts of revenue in October and November, but we don't want to steal their thunder neither. But so we are looking at that starting around about early next year, January, February, to start putting out the information. Obviously, in agreement with those two entities. Do bear in mind that they're using our technology, so we can't just blast out their information without communicating with them. So anyway, I'm sorry that my explanation was so long, Michael, but I want to give you an idea of our sentiment as a company, as management. We obviously want you to know as much as you can. And so, yes, the answer is yes, but let's leave it until January, February of next year, so we can get those two entities on board and also give you a further update on the travel sales, which will continue to proceed correctly, VCC, and the other aspects too. Okay, so next question, Bob Frank. Is there any time frame for uplisting to TSX? So, where the TSX is concerned, we've basically been working on the sandbox issues, as everybody's aware. One fundamental point that has been clear to us probably since around about June of this year was that the prospects for that would be far greater if we had the CFO on board and we'd made some slight structural changes. So you saw a couple of things happen. One, obviously, probably thought it was unrelated, but obviously change of auditor. And secondly, obviously bringing Jason on in November the 22nd. So to clearly answer your question, the time frame is approaching on the basis that those two moves that we made were specifically, or at least partly, on an important basis, associated with that subject of uplisting. So anyway, I hope I answered your question. Harvinder, do we need the card for Revolux to work? I guess you're referring, Harvinder, to the top tier card issuer and how that's associated with Revolux. So actually, no, we do not, because as you can see, Revolux works now with the card that we have. But to get into, and again, I've got to tread carefully here about what I say, but to get into the major aspects of these DCE relationships and that two-way street that I have mentioned, that we are now receptive to, it is important. And again, I hope that's the question you were asking about the correlation between the top tier card issuer and the Revolux platform. It is fundamentally important, but if let's just say that it's 100% of what we want to do is this, right? We can get to 40-50% with our current structure, and we are. It is functioning, right? But there are other extremely important facets of that which really require us to be the controller of the other side of it, which is the card issuance side. So no, in a straight answer, we don't need it in order for it to work, but for it to work in a way that you're not yet aware of, or in the size or manner that it would need to work in the future, yes, we do need the card issuer on board for those aspects that are not yet public. But all you have to do is look out there and see some of the bigger entities, Crypto.com and some of the others, and you'll see that there's sections of where we need to go. And those sections where we need to go do require, or it would be much better with, the the top tier card issuer direct principal license, and that's why we pursued it. We pursued it for that reason. So anyway, I hope I answered that question, Harvinda, and I'll move on again. I have another question from Bob. How close is the Dubai license from being obtained? Okay, so I think I told shareholders that I jumped into that particular issue around about 4 weeks ago now, 3.5 weeks ago. And I've been looking through what's going on with that, and I would estimate, first of all, there is no reason why that license has not been issued yet, which is always a good sign, right? There's nothing that has come back to us that is asking us to do anything more or provide any more information. What we did have, and again, this is just immaterial to the outcome, but at least I'll try and make it as relevant as possible. The regulator, the lady regulator, female, who was dealing with our case was away on vacation for 4 weeks. So, these things happen, and so we tried to get it shifted across to another regulator within that particular department. And to a certain extent, we did push certain aspects ahead. But that, I'm always trying to be as clear as possible in these types of responses. This is just day-to-day stuff. Sometimes these things, there's no particular reason why something isn't granted or approved. It's just tiny details of somebody not being around, or somebody from another department that hasn't responded to the regulator, or they're just little details. And if you'd asked me this question back in October, I would have said November, because I don't have anything that indicates to me why this license should not be issued. And so I have to answer the same today as I would have in October, because I still am not aware, after having personally looked at all of the paperwork, there isn't a single thing that could indicate to me that there's any issue of why that license hasn't already been issued. So I hope that helps you to understand just sometimes the situation that management finds itself in. It's just illogical scenarios as to, so if everything's fine, then why have we not been issued the license? And this has happened before. It happened with the Florida regulator. It happened with the Bank of Spain. And we were always forthcoming with shareholders, just telling you blow by blow what was going on, and sometimes it gets frustrating. But anyway, I always tend to belabor things a little too much, so I'm not going to go any further with that. I'm just saying that there isn't a reason right now, Bob, why that license should not have been issued, let's just say yesterday. That is the truth, right? So on that level, it's obviously positive. And we want the license because we want, obviously, Revolugroup to start functioning, because it's intrinsically linked to other aspects of the business that I know many of you have pieced together already. Anyway, I'm going to move ahead. Harvinda, another question. It's the same question. Do we need the card for Revolux, which I believe I already answered. Maybe I'm just going too slow with these questions. Hi, Steve. You mentioned that you're willing to look at the two. I'm not sure if you guys can read this. Maybe I'm reading it out. Jim, can they read what I'm reading or not?
I don't know.
Okay. Anyway, I'll read them out anyway. Are willing to look at the two-way street in terms of also providing crypto onboarding. You briefly also said that we can't go back and debate whether or not we missed out. I agree. My question is, are there still many opportunities out there besides Huobi? If yes, shouldn't they be approached as soon as possible? Yeah, I mean, listen, that, George, is a very pertinent question. And it's one that, in hindsight, this is always the same. Damned if you do, damned if you don't. I'm sure you know that saying, right? Had we pursued the use of our license for the acquisition of crypto, let's say back in 2019, because we could have done it, right? I believe that my colleagues and I, management of this company, would have had some serious problems. That's what I think. That's my opinion. And the reason why I come to that conclusion is because I have seen entities licensed who have worked through that period of time when you had the witch hunt against the crypto sphere be taken down. I have seen it with my own eyes, and we did not want to subject shareholders to that risk. So a couple of things have happened, and your question is really pertinent. It's sort of, I think it alludes to something like, do you think we missed the boat type thing, right? I think that's what you're trying to say, George. Do you think that we by holding back, that now there's no further opportunities out there? Well, no, I do not, because the problem that we have here is that lots of the players in this sphere, and I'm not going to name them, but you know who they are, right? They're using third-party licenses to generate revenue that the market is looking at. Jim and I was talking about this just yesterday, right? They're using third-party bank licenses to generate revenue. The market is just looking exclusively at the revenue, and they're not considering that the aspect of this is that when you are not the primary license holder, you cannot control the continuance of that revenue, the continuance of the revenue. Anything can happen, anything at all, and that, as far as I'm concerned, is a risk scenario that I would never expose shareholders to. I understand that companies are and have been extremely successful on an SP basis and on a market cap basis. We just saw one last week that got their market cap cut in half just by that sort of information coming out into the public domain. And it still has not come out entirely. It still has not come out entirely that the licenses that are being used by these entities do not belong to the entity. So imagine how far away they are from controlling the revenue flow. It looks good on the top line, on the quarterly filing or the annual filing, but the question is that the risk is just too great. So going back to the direct question you have asked, no, I don't think that we missed the boat. I think that lots of these entities are going to fall by the wayside. I believe personally that these DCEs, I mean, there's a subliminal message in what we're hearing from these central banks and regulators. And the subliminal message is, first of all, if we'd spoken to them back in 2019, 2020, they would have looked at you like the devil if you started speaking to them about crypto. Whereas now you speak about crypto and they're the ones starting the conversation, right? So there is a certain amount of recognition of the asset class, and that is only going to increase. But what that means, and this is really important what I'm about to say, what it means is that these DCEs can no longer fly under the radar. Okay? They've been flying under the radar for 3 or 4 years because their asset class was not being recognized. So basically, it's sort of like a renegade financial sphere that's ongoing. But as the regulators start to accept the existence of the asset class and start to embrace it, these DCEs and the whole industry is going to have to fall in line. And when they do fall in line, guess what they need? They need the licenses that companies such as ours have on a proprietary basis in order to be able to function. So that is a significant point here in terms of, and people have spoken to me, and I hope I'm not going on for too long with this answer, but I'm just passionate about this side of it, of whether we've missed the boat or if it's a little too late or things like that. I don't think that that's the case. I think that the whole scenario is lining itself up perfectly with the recognition by the authorities, by the central banks, and by the regulators of the asset class, and then the obligation of the entities that are functioning within that sphere to become regulated. And so the only way to become regulated is to have a banking license, because you're moving money at the end of the day. You can't hide behind, once it becomes an asset class, you can't hide behind the fact that it's a cryptocurrency, and so it's not an asset class, so we're not subject to international banking regulations. And that is a key aspect here in terms of what the future holds. And these DCs have got deep pockets, believe me. Anyway, I think I've said enough on that. I'm going to move ahead. Terry Hughes, can you give an update on TSX uplist? I already did, Terry, so I'm going to move ahead. Lois Aylan, how does Revo plan to attract customers and thrust the company? And attract customers and trust for the company transfer apps. Does it plan to complete with well-established apps such as PayPal, Venmo? If so, how can? Okay, so as I mentioned, Lois, back in June, and I've said this for quite some time prior to that, but I made it public in June. I have said that this company is going to utilize the white label concept to push out the technology. That's what's going to happen. And that is what is happening. But will happen on a much larger scale as we move forward. So I think it's going to be unlikely that you see Revolupay as a brand, like PayPal and Venmo, as you have mentioned. You could say competing with our white label partners. As far as I'm concerned, on a business standpoint, I believe that both PayPal and Venmo have made a mistake. That's my view, right? Because they should have white labeled their platforms years ago. Because if they had, they would have been able to approach these entities, such as the large mobile phone operators and some of these large companies that would like to get a cut of the business that's going on, but they don't have the technology. So that gives you an insight into the way my mind believe that both of those two entities should have white labeled a long time ago. Okay, and that sort of answers your question for you. I don't think a time is going to arrive when all of a sudden Revolupay is in the headlines as the mechanism comparable to Venmo, PayPal. I think what you're going to see is partners in the headlines, and then this sort of tacit recognition through the same headlines where people say, hey, guess what? Behind the scenes of this news is a public company out of Canada that has international banking licenses that runs all this. Do you not see that it says powered by Revolve? So that's how we'll probably end up getting the recognition. And we already are, by the way, but on a smaller scale. So I hope I answered your question. Moving ahead, Joe Van Vacas, follow-up. If I understand correctly, no additional licensing is required. It can happen now that you are willing. Yeah, I mean, I think what you're referring to, George, is my desire or recent desire, if you like, to embrace the other way of that too. So no, exactly. No other license is required. We have had, as I tried to mention in the previous answer, we've obviously had through this interim period many entities come to us and say, why don't you use your license to do the onboarding? And I've already explained why I thought that was a serious risk to shareholders. So the simple answer to your question, no, we don't need any additional licensing. And the Dubai license, I hope I've clarified that it has absolutely nothing to do with anything that we're doing with transfer, send, or any of the white labels outside of Revolugroup. The real sole objective with this DFSA license is requirement for Revolugroup, which I've already explained anyway. So I just don't want that crossover where shareholders don't understand and they think that somehow that DFSA license is holding things up in the other aspects. It isn't. Anyway, Sean Carpenter. Is there a competition to ask the most material question in the... Okay, right. Yeah. Well, go ahead, Sean. I'm not sure if you get it answered, but you can try. JT, Steve, in regards to Million Bridges, have you heard a timeline on when the larger NGO funds will start flowing with them? Listen, I think that we've already alluded to you, so I'm going to say it. These are huge taps, right? Let's use that as a metaphor. And they need to start with trial tests. I did allude to it in the news. In fact, I tried to make it as clear as possible, and I know that you guys are not familiar with all of the shenanigans that go on with the funds that are sent to own countries or in humanitarian aid, but there's all sorts of shenanigans that go on. And the biggest problem that the NGOs have is satisfying the donors, believe it or not. The people who are actually sending the money want some type of backup as to what happened, right? Just on an accounting standpoint. And so they're acutely aware that lots of the funds don't actually get utilized for the reason they were issued. And so the beauty of systems such as Million Bridges and others that are feasible through a mechanism that we have obviously set up because it's our technology, is that reporting back to the donors is so precise because it says where the purchase took place, what time it took place, what was being purchased, and all of these things. And that is a dream come true for these NGOs. They want to control how the funds are being utilized, because then what happens is, as everybody's probably aware, all you have to do is read the news. $100 million was sent to this particular location, and then 2 or 3 years later, we hear that some minister walked away with 10, and another one, some bank took away whatever. I mean, everybody's familiar with these stories that tend to come out shortly thereafter or sometime thereafter where funds have vanished. So the NGOs are really sensitive to that. And so the answer to your question is, in terms of when will we know, the NGOs are already flowing funds. I've already mentioned that in the news, right? It's setting up a mechanism that allows the large flows to commence in a manner that allows the correct reporting back, right? They've even moved some of these NGOs. It was in that news release that I issued, was they've moved to these vouchers where at least the voucher gives some control, but it's not practical. These vouchers are not practical, whereas a system such as ours is very practical. Moving ahead. Michael, how many VIP subscriptions are currently active? You know what? I haven't looked at that for some time. I think the last time I looked was like 300 and something. There were very few. If anybody uses a calendar and goes back to us finally throughout 2019, there is a series of news releases. Obviously, I haven't gone through them today, Michael, because it's 2 years ago. But really, VIP started or was concluded towards the end of 2019. That's when really it had its source, right? That's when all of the suppliers were on board. If you recall, towards the end of 2019, we had the cruises, we had the the hotel chains coming on, and we started to get the mass of the services that were required for that to really start being pushed out in a subscription basis through the white label mechanism. But then COVID hit, and again, I keep moving away from it because every CEO I listen to uses that as an excuse. But in our particular case, where VIP is concerned, I think it is patently clear we spent all of 2019 putting the finishing touches onto that. We were doing well. It started out well. We had a series, including an enormous Chinese entity, to take on the white label of that, and then COVID hit. And I think that while it's not unfair to look at this and say, well, hey, what's happened? I understand. As a shareholder, I'd ask the same question. But I think if you read between the lines in the news from November the 22nd, in terms of recommencement of travel sales, and then really the dead period we had, beginning of 2020 until literally November 2022, there wasn't really anything that could be done with that. I mean, how could we go out and talk to these companies and say, hey, well, what about this white label we were discussing with you in 2019 to sign it up and get it moving? And look at you blank faced and say, well, hold on a second. I mean, we don't have a single person flying anywhere. There are no planes. Do you understand? It just doesn't. Some things just don't fall in the order that you expect them to. So anyway, I hope I answered your question. Lena, I'm not sure how to pronounce that. It seems like Revo is losing its first mover advantage. There are many new companies joining the fintech world with evaluations that are significantly higher. What are your comments on where the SP market cap is for Revo, and what seems to be the market giving no value to any of the licenses up? Okay, right. Perfect. Excellent question. And pointed, Lena. I appreciate these sorts of questions because it allows me to give you an inside view of the way I see it. Okay, so first of all, the first mover status. If you analyze these so-called first movers, and I've brushed on this a few moments ago in another explanation. You look at the market cap, right? I'm not going to name the company, but let's just say the one that has 6 billion market cap that was sliced in half last week, right? Look at who has the licenses to run those funds through that company. Look at the other one that was doing the Chinese flows. Begins with P. I'm not going to mention the symbol. When you peel back the surface of that, it is fantastic because they basically got involved, sat in the middle of flows, using a third-party license, showing to shareholders incredible revenue, and it all looks good on paper, right? The first mover advantage, having those sorts of entities as first movers, in my view, is not difficult to overcome because they don't have any licenses. They're not the primary licensed entity. I understand that when you look at the market cap and the trading value, it seems largely irrelevant, but who cares if they don't have the license? They look at the market cap and look, everybody's making a fortune on these shares and this and that. But as management of a company, you have to create a structure that can continue to operate no matter what the circumstances are. You have to create a scenario where your license is proprietary and your continued search for an acquisition of licenses to work in different jurisdictions. You have to ferment these relationships, first with the passporting, then with PNC and Thunes and the other entities to give us the 120 country scope that we need to be able to push other verticals into it. So have we missed the first mover advantage? Well, based upon the fact that those first movers, and I'll openly, let me just say that I'll go for 80%. I'm going to go for 80% of those alleged first movers have no autonomous ability to be able to work in the sphere that they operate in. I repeat, no autonomous ability. They're not licensed. They do not have a proprietary license. Again, peel back the surface and look below. But the essence of this is that the companies that are licensed, that are able to operate and continue to operate, and they control their own destiny, are the ones that, in my view, will float to the surface over the ensuing year, over the next year, year and a half. I'll just ask a real simple question, Lee. Okay? If you were, let's just say, Hobie, right? And you wanted to have onboarding running through an entity. Okay? So now everybody's regulated. Now Hobie's regulated, DISDAC's regulated, everybody is regulated. Okay, so the regulator is approved. Now moving asset classes that are recognized, crypto is recognized. Okay, if you were Hobie and you were looking to engage with an entity to provide those flows at that time, would you deal with a company that is self-licensed, or would you deal with a company that has a license from a friend who knows a brother that knows somebody else? Sorry to use that example, but do you understand? We haven't had the ability yet to come in terms of how important these licenses are, because you have all of these entities that surround us that look like, simulate as if they've got their licenses, but in fact they do not. And you're seeing the market caps they are attaining. Again, when we break ground on these white labels and we start seeing the revenue that comes in, I believe that that's when the surface will be scratched away, and shareholders will start looking at entities such as ours and putting us in the same basket and saying there's a stark difference between these two other entities and this one, because these guys are self-licensed and they can sustain the business for the future. The others are risky plays because they do not. Now, however, there are no entities self-licensed in that mix, everything looks fine for the other guys. I clarified what I meant there. Anyway, I'll move on to the next question. TM1. Hi, Steve. Is there extra urgency concern in there are other Canadian competition spaces we are trying to disrupt? Okay, so, of course, I mean, I'd be foolish to say that I disregard competition. Of course, I'm constantly looking at competition, but I think that you have to qualify what competition is. If tomorrow morning the open banking regulations were approved, let's just say we wake up tomorrow and the open banking is approved. Look at the entities that you consider as competitors of Revolugroup and tell me, or find out, or read into between the lines. Are they self-licensed? Do they have the license to be able to carry out the business they're currently involved in? Because when open banking is approved in Canada, third-party license holders do not qualify. Just hope you understand that. You don't qualify as a third-party license holder. If you got a license from some entity over in Australia or another one from Cyprus, I'm sorry, you don't qualify. Because you are not the principal. You have to bring the Cyprus company all the Australian company to Canada. They need to set up shop, and they need to meet with the regulators, and they need to obtain the correct licensing. And that is a fundamental aspect. So when we look at competition, or whether they're Canadian entities that are currently in the realm could possibly be competitors to us, hey, if they've got their own licenses and they're working and they have Europe, because you need Europe. I mean, this whole open bank doesn't work without Europe, right? So you need Europe. You need, to a certain extent, China. You need the United States. Show me a company, Canadian competition that you're referring to, TM1, that has all those licenses. And when I say all those licenses, I mean that they possess the licenses themselves. I'm not referring to we've got to deal with a company out of Europe, or we've got to deal with a company out of the US. I'm saying, do they have their own license? So I hope I clarified that. Why 2021 was called revenue year? Well, why? Because as I tried to belabor from the start of this narrative, from way back to, let me just go through the word here. I started explaining the news releases from December the 21st. Okay, so this is something that shareholders need to understand. When we write news releases and when we put the content in those news releases, that is information, that's material that we know about between 72 and 0 hours from when it's published. So we have a good idea of what's happening. We have a good idea of what's going to transpire in a given period of time, more or less based upon feedback that we get. I mean, it's just a normal management scenario. You have foresight. You can see a certain distance ahead. So towards the end of 2020, we had all of these advents that were approaching. We seemingly had, on 30th of December, we had the currency exchange launched. We had the DC affiliates. We knew about, at that time, obviously, we knew about Million Bridges. We knew about Sendity. We knew about Prosegur. We knew about a series of facets that were seemingly going to initiate at the start of the year. And the news sort of, if you go through it and read between the lines, there wasn't a reason back in December and January. December 2020, January 2021, as we moved ahead, when those statements were made concerning revenue year, there wasn't a reason why these different aspects which were supposed to kick in weren't going to kick in when it was planned. As we've moved ahead through the year, and I've gone to pains to explain, I've gone through all the news for that particular reason, so that you can see the shifting priorities and concept as we move through things. Some things just got trapped and held back, and others moved forward to a certain extent. We had the news release about Huobi, and about Million Bridges, and about Sendity, and their management said, "Hey, we're starting this month," and then we see that the start is held up because they're still waiting for the Red Cross, and so you see, I'm going to repeat a comment I made earlier: damned if you do, damned if you don't. You give the information, you put it out because that's what you've been given, and then other things happen. So I don't want to make this all sound like an excuse, because otherwise it doesn't give you a reply to your question. There was nothing back in December of 2020, January 2021, that indicated to us that all the things that we had running and everything that was upcoming was not going to start imminently between February, March, max April of this year. Things happened along the way, as you've seen. That has caused a certain amount of frustration, not only with shareholders, but also with management. And it's just been an ongoing, and that's why I use the word saga twice or three times in my narrative, because that's what it seems like. But the thing is that the objectives are being achieved. So that's why, Michael, it was referred to as revenue year. That's what was expected to take place, but sadly, the white labels didn't start when they should. The DCEs had issues in Singapore and Europe, and things that they couldn't even project, right? So anyway, going to move ahead. Debbie Wilton. Hi, Steve. Is there any explanation for the 100% decrease in revenue from Revolve Utility? I'm having trouble understanding how that's connected to COVID. Okay, right. Yes, I gladly reply to that, Debbie. Right. So the primary revenue streams of the company, if we go back to when we started providing these monthly updates, it was December 2019, January 2020, February 2020, and I think they just ceased in March, if I recall correctly, because of COVID, right? So utility is what we should all consider as an add-on, right? It's going to be very similar with Revolve Bet. It's going to be the same with Med, right? These are additional verticals that, if you want, you could say spice up a key vertical, right? We're starting to see, and it's materializing, that Revolugroup is a key vertical, right? So Revolugroup brings on board a group of people, right? Because they want to send money to family members somewhere around the world. And as a byproduct of that, they become aware of our system. So then the verticals such as utility and, to a certain extent, charge and others, which are add-ons, start to benefit from these flows, because somebody's using the system, so they realize they can buy a Microsoft software license, or they can get Netflix, or they can whatever, and they start using utility, but they start using utility because they're using Send. Do you understand that they're not using utility because that's what they came to the show for? It's sort of, I know it sounds like inverted logic, but that's how it's being conceived. You've got a nucleus of key user attractive verticals that bring the masses in, and then they are surrounded by these less important verticals that less important but have utility. That's why it's called Revolve Utility or Revolve Charge. But actually fighting for market presence with, let's say, Charge against some of the bigger companies is a fool's errand, because we got the revenue for Charge because we were handling the revenue for the VCC and for the VIP, because people were going on vacation, they were buying the minutes, getting the SIM card delivered, and that was why Charge was working, right? So we haven't particularly gone into the Charge market and pursued it in terms of making that a venerable standalone vertical. It just had the overshoot of business from VCC and VIP. Utility, to answer your question, your question's clear. Utility is another one of those verticals. It's just an add-on. So you'll start seeing utility being used as, for example, Send increases its use, whether that be through the white labels or whether that be through direct usage. And you'll start seeing it when transfer emerges. Transfer is going to be a big one, because it's going to start bringing in the masses of transfers that are required for key industries that cannot be covered by send. It's too high for send. The 2,500 euro, 3,000 euro monthly amounts that go through send. We're talking about with transfer anything over that, 50,000, 100 million, 5 million, whatever. And so that is a whole different segment. And you'll see, I believe that transfer will bring in a lot of users for VIP, for example. That's what I think will happen, because that's the type of profile for the market, right? So I hope I answered your question. If I didn't, just ask it again or clarify it further down. Harvinder, what are the chances of getting the card this month, and what are the chances of getting Revolux next month? I'm not sure. I think this is a similar question that you asked earlier. So I'm just going to brush over it again. We already have a card. It already works, and it's already associated with the Revolux, and there's no reason why it doesn't work. It does work. If what you're referring to is the primary card issuer license for the company, and somehow then that association with the DCEs, then yes, as I've mentioned, there is a continuation of that business model as it gets rolled out into the white label into the white label realm. Let's call it that. Right? There are extensions of it that do require or would be better served with a proprietary issued card where we are the principal issuer, and more to the point, principal issuer of white label cards, right? So again, this is another aspect of where the direction goes when you push out into these white label enormous databases. You can't be using third-party aspects when you're getting to huge amounts of users coming on board. You need to be calling all the shots all the time and be the entity that is a precursor and also the licensed entity for whatever it is you're proposing. Otherwise, you run into inconveniences. You can't do a deal with a company such as Huobi and then have cards emanating from another small company that's just unable to keep up with it, and it ends up damaging your relationship because you can't keep up with it. You have to be self-contained and autonomous to enter into these sorts of white labels. And that's just one example. Any other that emerges in the future, we can't be shackled by a third party that provides us with some sort of service that is ancillary to the ensemble of everything that we provide to that company. We need to be self-sufficient. We need the direct license. And that's why we don't have these third-party licenses. That's why we don't need them, and they would have been unsuccessful for our business plan to go towards the white label environment. That's the whole thing about being able to white label your technology. You have to be the proprietary license holder. Otherwise, it doesn't work, because you can't modulate and change to suit the requirements, because you've constantly got to go back and ask the licensed holder if he's in agreement with whatever facet of the business is being proposed, and that's just not workable. Moving ahead, Fortuna. Yes, we can read all the questions. I don't know how far I've gotten down. 2:20. Oh, okay, so I'm like 25 minutes behind here. Hello, Steve. How much longer? Jim, are you... Jim?
Mm-hmm.
Are you okay?
I've got to go by 12, but you can carry on.
Okay, but if you leave, it's not a problem. I can still answer these questions.
Yeah.
I'll just be looking at the guitar on your wall. That's all.
Yeah.
Okay, good. All right. So, hello, Steve. How much longer do we need to fly under the radar? Our daily share volumes have been so low for so long. We need to create new investor interest. Thank you. Okay. Evidently, I mean, that isn't rocket science. I understand. Let me just see what your name is or was. Pete says something. I can't read the rest of it. You fly under the radar until you don't. That's basically the moral of my stories. Is all of a sudden the recognition becomes apparent. Oddly enough, in Europe, what we have had is a scenario in which because of the deal with Prosegur, there has been significant recognition over there in terms of the size of that company, the fact that we're obviously a smaller company in terms of market cap, dealing with a company such as that, but that isn't our primary market. So it's the catalysts that emerge from the upcoming white labels that places on the on the proverbial map, if you want to say that. And what we've arrived at is a juncture in which the delay in certain advents, and I'm just going to go basically say the three remaining advents of 2021 that have been so horrendously protracted that the market is essentially waiting, as far as I'm concerned, for those advents to occur. But also that there's a wait and see type attitude in terms of the Huobi outcome and the DISDAC outcome and the DCs as a whole, and obviously the card issue. And I think that's the downtime period that we find ourselves in. So we have not wanted to go out and publicize the status that we're in right now in any major way. If you look at the essence of the concept of the company in terms of white labels, you will see that the publicity is done indirectly about us. I know it isn't our name that's out there, but anybody who visits these websites or looks at what is being done somewhere above the fold on the website or on the app, it will say powered by Revolugroup. It has to, because that's what the contract says, right? That's why you always see it. So the recognition that we seek, and the recognition that would answer your question about flying under the radar, is these are scenarios that can change overnight. I mean, it literally, you could literally wake up tomorrow morning and a huge entity such as these DCEs puts out something concerning its white label. And then not only are you on the radar, but you're in the center of the radar. And that's, for us to, what I would consider waste money by doing what other companies do, which would be to market the fact that we've got these licenses and that we're prepared and we're able to do it. Just to waste money doing that when you have huge household names which are on the verge of taking white label relationships with us, pushing our technology out into huge databases. You'd look back and you'd say, well, why did they spend this money on these TV ads or this print media when this sole advent is 1,000 times more powerful than that? The timing would be way off. And I guess the whole thing about flying under the radar and understanding conceptually how our mind works is, while ever things get protracted, while ever things drag on, it looks like we could have done more. But the problem is that we could have done more by spending money to do something that would have been menial compared to the final result of these white labels being launched. So it would have looked like, in hindsight, that we literally just wasted the money to try and fill a gap to sustain some sort of minimal recognition of the company through a period of time until such times the white labels were launched. I don't think that is I understand that it's frustrating in terms of the SP, and that we all want the SP to trade higher, and we want the business to be more recognized. But I'm not sure it's rational to, just because of these delays, go back and say, okay, well, let's contemplate spending $200,000 on promoting the company and some direct verticals, when literally a month or so later, an entity will come out and push forth the white label and literally make the supporting software, which would be Revolugroup, a household name. I'm not sure if I've managed to answer the question, but that's the dilemma that exists. That obviously, when we're faced with the frustration of a low SP, we grasp at any straw to find a solution. But sometimes those straws that we grasp at are expensive, and they don't provide the type of outcome that would be even remotely comparable to the outcome we know will exist when these white labels launch. So anyway, I'm going to move on to the next question. So Bashalot, that was a good one. Why is it better for Revo to fly under the radar while our competitors expand and make revenue? Okay, I guess that's the same sort of question. Even if it's under a third-party license. Okay, well, let me see if I can phrase this in a different way, because obviously if you've asked the question again, it hasn't been clear enough. These scenarios that we're currently in, we're in a very bizarre period in fintech, right? Because we're seeing entities come in who see a few examples of things going on the left and things going along on the right, and they set up a little company and they get it quoted on a venture exchange or some other location, and they piece together or hash together these components that could make a wave in terms of them having some sort of revenue, right? We saw it with, I'm reluctant to mention names because otherwise my explanations would be really clear, but I don't want to get into slandering other companies. But there's one company that, and you'll all know what I mean when I say what I'm about to say anyway, so I've got no reason to say the name. That was going to get a Visa card and a Visa license, and they were doing a crypto exchange, and they were going from fiat to crypto to fiat, and all this was through third-party licenses, and we're going to have a Visa card that's associated or whatever, and they did well. I mean, in terms of the fact that they're currently halted and not operating is obviously a pretty severe outcome. But the fact is that like that entity, there are a number. Just piecing together the different aspects of what they think is required, or at least what is conceptually required. I'll get a license from this place, and I'll speak to another company to issue me the cards, and I'll put this together, and I'll do that. And evidently, this isn't how Revolugroup has been set up. We've been set up, and we are operating in a transparent manner, and that's why it takes so long. Right? That's why it takes so long. I mean, would it have been easier back in 2018, 2019 that I went out and got a third-party license for PSD2 and went out and got a third-party license for this and that, and third-party license for FinTrack? Of course, yes. And maybe that could have been more satisfying for shareholders that we somehow sort of have results in terms of just revenue numbers. but it would have been a synthetic business with no backbone, with no intrinsic value going forward. It would have been sort of like a theater. To say it frankly, that's what it would have been. You have to be really careful when you make these comparisons of these entities. I mean, I've spoken to shareholders, and as everybody knows, I really enjoy discussing not just this company, but just the whole gamut of what's going on. And it's easy, really easy, to put together the components. I mean, hell, we've got a company, 6 billion market cap. It just got slashed in half because of some, and basically the essence of it could fall apart tomorrow morning if the third parties that offer the licenses to allow the very business to continue retract from the scenario. I mean, literally overnight, the third parties that provide these licenses could become disenchanted with the business, could be bought out. They could literally be purchased by another entity that says, hey, we're not interested anymore in allowing you to use our license because we've bought this company and you can't use it anymore. I don't think that is a good investment for shareholders, in my view. I understand that plenty of people invest, and most people don't particularly care so long as the stock's going up. But as a CEO and the director of a company, my job are things that can be sustained, that can continue forever in the future. It's to resolve a temporary problem right now. And just amass a group of friends and licenses and things, and just pack them all together and get the stock to the highest it can get to, and really it has no intrinsic value when you scrape away the surface. It just isn't my way of doing things, Sir Bachelor. It isn't my. And again. Whether that's a positive or a negative, only you know as a shareholder. But this whole thing, I mean, I didn't want to make my job harder. I'm not a masochist. I didn't want to make my job harder voluntarily. So yes, it would have been easier. Of course it would, to just amass third-party licenses from all over the place, package them, to put them out there, and do what some of these companies, apparently successful, that's what I'm reading, are doing. I see longevity in that, personally, and that's why this company is being built right, rather than, at least the way I think is right. And people will differ and will have their own views as to, people say it's right. Maybe people think it's right to use third-party licenses for everything, and I am wrong. I'm not going to. Nah, I mean, people can have their own views about what is right and wrong. As far as I'm concerned, if you're invested in a business, you want to know that that business can sustain its activities no matter what happens in terms of being self-licensed. Okay? I'll give you a crazy example. 2 restaurants down the street. One of them has a license, the other doesn't have a license. The guy who doesn't have a license goes to the one next door and says, listen, why don't we change the number on my commercial building to the same number as yours, and then I'll use your license. If the police walk by, they'll see it's the same number and they'll just think it's the same building, and I'll give you part of the money that I earn from selling sandwiches. If there are people out there that see that as a valuable business model, then who am I to question? Yes, the guy sells sandwiches. Yes, he's on a high street. Yes, he apparently has a business that's running. Is there longevity in that business? Probably not. Because he's not even licensed to do the activity that. It may sound like a crazy example, but it's the simplest I can give. Don Lee, the share price has been boxed for a long time with all its potential. What can Revo shareholders expect in 2022? What you can expect is, as I tried to explain while I was going through the year of the news releases, is we are pretty much now at the crescendo stage of this business plan in terms of we've just got a key license we required less than 2 months ago, the US license. It should be clear that most of these verticals that we have, one of the most recent, the Revolugroup, the fact that that's been embraced the way it has and is operational through third parties of the caliber that are using it, I think that shareholders are going to see in 2022 an adoption of our technology in different spheres. And I don't mean just Revolugroup. I think what you can expect is to see things like VIP being white label, possibly packaged in like an ensemble, like a part of an app that already belongs to somebody else. If I was to refer, for example, to these mobile phone companies, the same thing with any of them, really, any of the verticals. Transfer is another one. That is a key white label angle, because if you look at the real estate websites in some of these key markets, let's just take Vancouver. That's a good example. Lots of Asians buying Vancouver, key market. Lots of South Americans buying Vancouver. Real estate agents have a thorn in their side, difficulty bringing in the funds, and that the buyer doesn't get ripped and pillaged by the bank, right? So false exchange rates and all the things that everybody's familiar with that deals with these sorts of transactions, right? So you imagine a minimized version of transfer encrusted within a real estate website, right? Just encrusted in there. How much do you want to send in your own currency? How much you need to satisfy the purchase of this property? And it gives them a broad brush idea as to what they can expect to pay. And that's what real estate companies should be getting involved in. The fact that they can get a commission back by working with us and allowing their client to be exposed to transfer or a variant of transfer through a white label is immaterial, because right now they don't make any money out of it. The banks don't give them anything, right? So they'd already be making 100% more than they're making today on what is basically a financial transaction bringing in the money. But you need the licenses to be able to do it, and we have the licenses, right? So those are the dreams and aspirations that things like transfer, when it launches, that it's deployed in all of these business spheres, that it's needed, and it's sorely needed. That's the point. It's sorely needed. I mean, the things that go on in that type of industry, where people send money from Brazil. I mean, I've seen some of these transactions and just looking at them from a distance and just seeing what actually took place. And a Brazilian buying a property, let's say in South Florida, and it's $2 million US. And so he's sending the equivalent amount, and money arrives in the bank account. And he's spoken to his bank, and they've given him the exchange rate, and he's sent everything, and he's ready to close, and contacts the US bank that's involved in the transaction that opened him a temporary account to be able to realize the transaction. Gives them a call after he sends the wire. and they tell him, we can't transfer $2 million to the developer because you've only received $1,950,000. And the guy's scratching his head because he's spoken to his bank, he's looked at the official exchange rates or whatever, and the bank has literally stolen $50,000 by giving a false exchange rate. And this is endemic to the industry. It is just everywhere you look. So the 2022, I believe we've shown, even though we haven't really gotten the recognition from the market, that key technology, at least in one area, which is Revolugroup, is valuable. And it's valuable because we are the proprietary licensee and the bank behind it, but we are also the technology. It's us. Everything you see is us. The technology, the banking license, and the support for the system is all us. Those white labels need to come out. As soon as they do, the different ones that need to come out, the ones that we're currently negotiating, the ones that are still not known to shareholders, as they come out, they'll create the inertia and the recognition. And that's what I think shareholders should expect, which is not something new. It's more of the same. And I know that it doesn't bode too well based upon our current SP when I say more of the same, because nobody wants more of the same. But when I say more of the same, what I'm referring to is more of what we already did in 2021 in terms of, for example, Revolugroup. One thing is to say you're going to do it. The other is to actually do it. And we did it. And it works. It really works. It works because Million Bridges. You guys are all talking about it. It's all over the place. That's our technology. That's our banking license. That's us. Behind that screen, when you scratch that screen behind there, that's us. Sendity, that's us. So when I say more of the same, more of that, more of our technology, whatever it may be, whether it be VIP, whether it be transfer, whether it be X, whether it be whatever, more of our technology being utilized by third parties to carry out financial transactions. Of course, we need and we want the huge ones to emerge, because when they emerge, we see a direct influence on the SP. But let me just frame this correctly. Now this is December 2021, right? If we were talking about December 2020, there'd still be doubt that Revolugroup works because it's never been released. There'd still be doubt about all the functioning of Revolugroup. We don't have a vertical right now that does not work. The ones that we have function. Now that is a bridge that unless you have crossed it, unless you have paid for, created, and owned that technology, how can you white label it? You can't white label something that doesn't exist. So in June of 2021, I've made it clear to shareholders that that is the angle that we are taking. This is where we're going. And we have shown with these two, it isn't enough. Clearly, the ASP is telling us that it isn't enough. But I feel that we're in a more enviable position today than we were a year ago, because the technology that we are going to white label functions. It is backed by proprietary licenses, and we now have the license that allows the backing to take place in the United States of America. We'd only gotten the Canadian license towards the back end of last year. So it takes time to build this infrastructure of support mechanism. And yes, I do understand that we could quite easily have gone out and found all of these licenses and started using third parties, but then there would be no intrinsic value in this business. There'd be no future or almost no future M&A activity possible. We'd have none of these companies looking at us and saying, we're now working with you, but we want to buy you. And I think that is what shareholders are overlooking. That is the intrinsic value. That's the end game. You cannot have an end game when everything that you do depends on a license from a third party. You have no intrinsic value. You're not worth anything other than last quarter's cash flow balance. And that sounds cool. I understand. Some people think that that is enough because they're seeing the price of these companies go up. But there's nothing to be had by purchasing them because they don't have any intrinsic value. What would you be buying? You'd be buying flows from some third parties where they're just sat in the middle. Would you not have to also go and buy the company that has the licenses to be sure that what you're buying can continue to function in the way that you envisage it? So again, I'm getting wrapped up in I guess in small talk, but I just wanted to make that clear. I cannot see if this was asked earlier, but is there anything that you can say regarding the delay of the credit card issuer deal? I know you were hoping to inform shareholders imminently. Okay, so, right. I can say this, that there's a difference of opinion with the let me try and frame this a little easier so I'm not okay, so there's a difference of opinion between my view of continuous disclosure and my requirement as your CEO to inform my shareholders that this company is actively pursuing and involved and to a certain extent fulfilling and carrying out all to become a primary card issuer. The difference of opinion that I have with the card issue, that I consider it my duty, and I have rules that I must abide by that guarantee that continuous disclosure to my shareholders. The card issuer, on the other hand, thinks that when you obtain the license, you could inform you. That is incorrect, as I do. That is incorrect because when we agree to, as management, to hypothetically invest in something or do something that could impact the company positively or negatively, it is our duty and obligation to our shareholders. So this, as a matter of case, would positively impact, but there are indirect costs associated with the pursuance of this particular license, of which I have no choice but to tell my shareholders. And so that is the toing and froing that's going on. I believe it's going to be resolved quickly because all it is it isn't a profound misunderstanding. It's just a misunderstanding about disclosure of when is the correct time to state it. It isn't about whether or not we qualify, because we do, because we have the license to do it, or whether or not desirous of working with us, which they are, obviously, otherwise we wouldn't be at the stage we're at. It's just about when is the right time to disclose this information, of which I am in disagreement, of course, with what their perception is as to what the continuous disclosure rules are. And I am and will continue to make it clear in the next few days that my duty to tell shareholders of anything that's likely to impact them, whether it be financial or otherwise, and therefore this information has to be made public. And that's really the situation we're at. Okay, so moving ahead. By the way, I hope I answered your question. Should we need to get some kind of valuation to help with Revo graduation, the big board? Yeah, I mean, we've already spoken about this, Christian. That the underlying petition does have a component that that requires the essence of or a basic valuation. We've been speaking about this for a couple of years now, and we've made it public that would be required. It isn't. I guess requirement isn't a word that I should use, but it let's say it's better that we do that. So yeah, at some point in the very near future, as I mentioned, Jason is now working on that. We are further ahead than we were based upon certain aspects of it, and necessarily the advent of a couple of these white labels and this pesky news, basically, these three elements that we've been waiting for, which seems like an eternity, because for me, 3 months is an eternity. Obviously I want these things concluded and out in the public domain so I can move on to something else. So while ever something just sort of festers in the background, it isn't, I don't particularly appreciate those scenarios because I've got other stuff that we need to get out to the public, and we need to move ahead, even on a psychological standpoint, so that the business plan is taking its shape in terms of it gives guidance as to where we're going. And that's why there's so many questions about 2022, because we're sort of in a limbo stage, because these three aspects are just lingering in the background. They need to be out into the public domain. So yes, I mean, to Christian, to answer your question, of course, there is going to be, let's call it a synopsis of the company, which would lend itself to a valuation type scenario, which is self-evident. Okay. So anyway, moving ahead. Steve, have you considered placing your shares in escrow in an attempt to help rebuild shareholders' confidence that's been damaged due to grand promises followed by delays, insider selling shares on open market? Also, once the 27 and 33 options get exercised, can shareholders expect yourself and other insiders to once again sell on open market despite it having a negative impact on shareholder value? Okay, what happened to EY? Okay, so Randy, okay, so that question is one that has lingered for quite some time. I don't want to really get into my personal financial investment in this company, because I don't think it's correct that this be a narrative. Maybe if you and I were sat together in a bar having a chat, then it could be correct. But in a public forum of this nature, I don't think it's correct. But I will still attempt to answer your question and to give you some clarity. The mechanism that was utilized in order to finance this business during that first phase, 2017, 18, 19, to limit the involvement of what I consider, or what management considers, as potentially investors who may not have the most honorable reason to invest. And I'm referring to private placements. There's always been a certain amount of reticence in terms of that, in terms of we have wanted to cultivate an environment in which the funds required to bring the business to where we've gotten to, where we're at right now, with all the licensing we have, technology is 100% owned by us and paid for, and all the things that you're aware of. There is always a couple of avenues that can be chosen, and the most common avenue is the one that inspires questions like yours, which is, why didn't we go down the avenue of private placement, and then, like, you wouldn't have been involved, Steve, and then there would have been all these nondescript people that nobody knows about who put the money into the company, and then we wouldn't have to ask you this question. That's basically what's going on here, right? And the reason for it is because first of all, the downtime of the private placements is usually like between 2 and 3 months. That's how it affects management, destabilizes things for a period of time, both the run up to it, during, and then shortly thereafter. Then you have the 4-month hold, and then you have everybody who never really had any interest in the company. If you do private placements like others do, right, who really have no interest in the company, and so like 4 months of one day, they're all dumped in the stock, and you sort of it's sort of a bittersweet moment, you could call it that. So, sorry, I'm just reading a message there. So, and I lost my train of thought. So, the method that we have used as to finance the company, and let me just preface this by saying that, Randy, you are aware that this is 2 years since we did a private placement, right? Previous to that, I think we'd gone, if I recall correctly, 18 months or almost 2 years too. And then we just did a small private placement in January of 2020. So, or December. So, about whether or not I have financed this business, or whether I've been involved in setting up a mechanism that would allow the repurchase of shares and taking down options or warrants in order to sustain the amount of funds required to be able to build everything that's been built over this period of time. I mean, this isn't a miracle that's happened here. Everything that we have in terms of verticals, licenses, offices, subsidiaries, and everything has been built using funds which, to a large extent, or to a greater extent, have been financed from within. When I say finance from within, it's just a terminology that we've used an alternative means instead of going to brokers or entities to raise funds, and those methods. So if there's any aspersions to be cast in terms of whether or not the mechanism that was used is palatable to certain people, it's not for me to say. I mean, people have their own opinions. What I do know is that I own 22 million or 21 million shares in 2016, and I own 18 million now, and it's 2021. What has happened in the interim is a financing mechanism that you either love it or you loathe it. And if there's any aspersions to be cast that people think that it should have been done in a different way, then I'm not anybody to tell people what they should think. If people don't think that was the good way of doing it, fine. Maybe they're not shareholders anymore. They've voted with their disgust over the way that the financing has been done over the years, right? But there's clearly shareholders out there who are in agreement with the way that otherwise they wouldn't be shareholders. So again, it's just it's a matter of opinion and it's subjective. And so to answer your question, I mean, I don't particularly have any need right now to sell any shares. So if you ask me now, 15th of December, I'm not selling any shares. I don't, whether other insiders, I don't think there is any insiders with any meaningful amount of shares really that would make any difference to the trading environment of this company. But what I can tell you is that if a scenario comes along in which we can do something that would give tremendous shareholder value, I don't know, without getting hypothetical, but let's just say that something comes along, and if we had $3 million, $5 million available to us, that we could increase the market cap of this company by 10, right? Then of course I would do everything in my power to pull together those funds, and probably, in order to make it simpler, I may. Why wouldn't I be the lead on that to inspire confidence, on that raise, if that was to exist? Again, hypothetically, I don't want anybody to take this out of context, but I don't see why it would be negative if I was to be involved in that to make it happen quicker and be more successful and give the shareholder value more efficiently through me undertaking that. It's like the last private placement we did. I put $500,000 into it. That was just under half of the total amount. So then people say, well, he sold, so therefore he just put it back in. And again, I'm not sure if it's of any particular merit to discuss it. I mean, what happened, and so to answer your question, I don't believe that insiders or anybody in the company management has done anything that is anything other than create a positive outcome. I think that the finances, the financing, that we have done have been clean, efficient, and they have had people involved who are intrinsically involved in the company. I fully understand that people are out there who would have preferred that all of that financing that was ever done was through some brokerage firms that sold all their shares on 4 months on one day. I understand. Honestly, I do. I don't think that I don't understand that. But understanding it and agreeing with it are two different things. And everybody's entitled to their opinion who would have preferred it be that way. I prefer it to be the way that it was done. And that's why it was done that way. Anyway, I'm going to move on. Yeah, I mean, the DCE deals, Michael, there's no reason why they're not already done, as I already covered. So basically, subject, they should already be done. There's no reason why they're not. And if the management of those companies, for one reason or another, delay it, we don't really have much prerogative to lean on them and say we can voice our disgust or say that we don't, we'd like you to go ahead and do it, but can't exactly leverage. This is our white label, our technology. They don't, if they don't want to start, then unfortunately that is just the way it is. So moving ahead. Steve, you gave yourself a raise, revenue today. Why? Also, do you get paid any consulting fees as well? If you do, don't you feel as being a CEO of the company? Okay, so first of all, I have not, Randy, received a raise. I'm not sure where you got that from. My contract is from 2019, if I believe, if I recall correctly, March or April. I have to look, but it's 2019, I believe. So there's been no changes since then. Possibly what you're referring to is you are looking at the bottom line on financial statements and you are assuming that any monies that through official reporting that flowed through either myself or companies that I control is somehow associated with my salary, as you call it here. So, no, my salary has not changed. There are certain aspects of this business that are handled by companies that I own, that I am the majority shareholder in. So those services are billed not at cents on the dollar, but probably 30 cents on the dollar compared to other entities that could provide an equivalent service. I've gone over this, and this is just been hashed out for so many times, but I'm willing to go over it again without any problems. So all of I have a web hosting company that owns. I've had it for over a decade, so well before being involved in this company, that owns its own servers, has its own IT team, has its own T1 connection, fiber connection, and provides web hosting services to a myriad of companies, including my own personal and other businesses' websites. And so this is just one example, by the way. So, and also because it's a commercial entity that has a wholesale license for domain renewals, it also gets, like, you would go out and try and renew a domain name, you maybe pay, I don't know, $13, $14, I don't know what it costs, but whereas to us as a business professional in the web hosting domain, we have special deals. So in our case, it's $6. So it's about half of what you would pay for, let's say, a domain renewal. Hosting, the same thing. So every website that you see beyond Revolugroup.com, that's hosted by a company called AdNet in Canada, but every other website that the company has, whether it be travel or any other website, everything, all the background, whatever, is handled through this hosting company, and that company builds its services. And so that, because it's going through a company that I control, that is attributed to me on the financials as what you may consider to be a salary, but it actually isn't a salary. It's just that the cost for those things is run through that company, and like that, there are numerous examples. For example, the domain names and things like that that my company's owned for decades, or at least since the 90s, that are used for VIP and things like that. So no, well, I've gone around the houses to explain that, but basically, no, I've not had a salary raise. To answer the first part of your question. Secondly, the company generated its lowest revenue to date. Again, I've not had a salary raise, so that sort of negates the answer to that question. And also the consulting fees. There's a great difference between consulting fees and or designated as consulting fees and actual billing for technical services that are associated, like I said, hosting or domain names or things like that, or when we renew domain names for the company. So, like, I don't know, Revolufin gets renewed, or RevoluPay gets renewed, or whatever. These are run through this wholesale agreement. Now, just to finish off on that topic, so let's just say that this is causing a serious amount of. We've gone through this, by the way, in 2019, because I got a little tired of people coming and asking me and saying, well, you're getting $500,000 a year or whatever. That's, people come to that conclusion. So for me, so I approached the company and said, look, why don't you just go and get hosting like by yourselves, and you get all the domain renewal by yourself, and just do all that stuff by yourself. Okay, so went to a Canadian company from Vancouver, went to another one from Toronto, went another one to another place, and we got 3 estimates to come in and take over that. It was over double what is currently billed to the company, the cheapest out of the 3. So, it's just I'm not willing to have shareholder capital just wasted just so that I can answer questions like this and I get my so-called salary every month, right? And then I don't get asked these questions anymore. I'm not willing to waste our money as a company just to satisfy this misgiving that the companies that I own that provide services to the company, that somehow there's this misconception where that's all my salary, right? The cost is too high in terms of me forcing the company to pay double the amount my company charges for a service just so I don't get these questions. So I hope I answered it anyway. Once we sign the card issuer, what will happen to the prepaid visas? Okay, so what will happen is that they will be slowly phased out. So the new cards will be introduced. You'll have X amount of months left on your other card. We're also considering rolling out the cards, and we just foot the bill, to just replace them off the bat. The whole concept, though, of the card issuer, Sir Bachelot, I like the name, is obviously for the new businesses. It's not really that important, the cards that are already issued, because we'll just replace those. It's when we go into these new agreements with whichever entity is doing the white label, and we need, I don't know, 50,000, 100,000 cards, it just makes it really easy when we are the primary card issuer. Okay, Randy Marsh again. With Trump administration out of the office, does Revo have any plans for? You know what? This is a question that I hope you're still around, because that is a really interesting question that you asked there, Randy. And almost uncanny. So, how can I frame this better? So we have been speaking to the State Department for about 7 months about this topic, exactly about this topic that you have just asked the question about. And we have made inroads, and I have personally been there, although we haven't spoken about it. And we have a mechanism. I'm not sure if you're aware. I'm not sure if shareholders are aware that all of the mechanisms to send remittances to the Republic of Cuba have been shut down. Not sure if you know or you don't know. I'm just straight. So they've all been shut down. So you've got Western Union, MoneyGram, all these companies have been closed down. Literally, I mean, Western Union has been in Cuba. They had like physical offices all over the place for 5 decades, and through the Trump administration, it just got shut down. And the Biden administration does not want to change that scenario, which we thought that he would, but they don't. So there's the stalemate for you. And the basic premise of the understanding that the State Department and Treasury Department has, or at least their concept of what they want to see, is they want the funds that are sent in remittances to go straight to the Cuban national, but not through the Cuban government. So through banks that are not controlled by the military in Cuba and not through the communist regime and all that stuff, right? So they're quite happy that funds leave the United States and go directly to the family member in Cuba. But there's no mechanism that Western Union or MoneyGram or these entities have, because Cuban government intelligently sat in their country and said, okay, well, you want to send money? I'm going to be the sole receiver of those funds. And then they took their percentage off the top and gave the Cuban citizen what was left. And that obviously is not acceptable to the State Department and Treasury. So my proposal has been for quite some time now, way before we got this MSB licenses, way before all this, and even emanating from Europe, has been to the State Department and Treasury, directly. It is, we understand the politics behind it. We understand that nobody wants these the Cuban military in the middle creaming off, taking off a percentage of the money. So what about funds going straight to the national in the country as you desire? And I'm not going to, I could go talk about this for about 2 hours and I won't ask any more questions. I won't answer any more questions. I just wanted to end what I just said is that, oddly enough, let me just look at the date today because I'll give you the exact date. The 7th of December, we received a reply from them, an official reply, that they're in agreement with what we propose. So we're working on that right now. We're actually working on that, putting that together. When I say they, I'm referring to the government of the United States and Treasury and State Department replied to us as a company that we wrote a 3-page explanation how it works some months ago, and they replied Tuesday the 7th of December that they agree with what we propose. So anyway, you can expect some movement on that, and we're particularly attracted to it because it's 3.8 billion, I think, was the previous year, 2018, until obviously what are they called? Western Union and MoneyGram got kicked out. There's been very little. I think they're down to like 1.2 billion through alternative means. It's a lot of money that's just pent up that needs to get down there. But yeah, intrinsically interested in it. I don't know if anybody wants me to go on, but I can speak all day and night, as most of you already know. Harvinder, another question. My question was what are the chances of getting the white label of the card issuer this month and the chances of getting the white label of 4B next month? Okay, so Harvinder, first of all, the premise of the DCE involvement in this white label is not centered around the card issue approval. Okay? Tried to make that clear in my previous reply, and obviously I wasn't clear enough. There for the current mechanism that would be white labeled, there isn't any problem to utilize the current card that exists through Pecunia and all that. This is not an impediment, okay, to the white label commencing. So I've got to make that clear. This is not the impediment. The white label is starting for other reasons. They had problems in Singapore. They had problems in other things that have nothing to do with us. As we have said in news, the white label is finished and completely 100% done. You read it in news. It's completely finished and approved. It is them that have to push out this white label. It is them as a company who have to make the moves to push it out. If they experience problems in their company that have nothing to do with Revolugroup, like zero. And again, I know it's frustrating, but there is no association between the card issuer or the cards or Revolugroup or anything that we are doing as a company that's impeding these DCEs launching their white label. Nothing. The reason why they are not launching is because of problems that they have in their own company. Things that they're resolving, their priorities change, and they're just doing other stuff. So that's what I was trying to say, that it isn't as if there is something missing. What I was trying to say, and I hope I answered, was there are aspects of these white labels and other white labels, not just this white label that you're referring to, but all the other white labels, the ones that you don't know about or the ones that you do know about, right? That absolutely need this proprietary credit card or debit card issuance for the business to extend into a realm that is yet to be announced to shareholders. Okay? So it's something that you don't know about. Everything that you know about, the way Revolux works, how it changed the funds from crypto to fiat, how the money is onboarded to the card through the app and all that stuff, that is a done deal. That is the simple part because it already functions. But there are parts of the white label, of the extended version of the white label, that will be launched after the fact at a different time, unrelated to this particular white label launch right now, that need this license to do other stuff that you don't even know about yet. Okay? That's just an extension, more attractive, different things. So there isn't a correlation between the two. No matter how much we talk about it, trying to create a correlation, there is. The reason why the white labels haven't launched has got nothing to do with the Revolugroup, nothing to do with the technology, nothing to do with the white label itself. It's functioning. We put it out in news. It's done. It's been approved. It's fine. There's nothing wrong with it. It works perfectly. The reason why is that we don't tell companies when they launch. They tell us. Do you understand? They sign with us a deal to use our technology or an agreement with us to use our technology of one nature or another. And we can't then go in and tell them when, like, you have to launch on this particular day. Otherwise, the deal is off. That isn't how white labeling works. You can't go in with a whip, right? And I know it's frustrating, and I understand, and I am the first, and we as management are the first to be frustrated. But you see, Million Bridges were supposed to launch on a certain day, and they did. Admittedly, they didn't start in earnest until several months later, but they did. Sendity was supposed to start on a certain day, and they did. Admittedly, not in earnest, but they did, and it's operational now. This, unfortunately, is one of them that has taken longer than we expected. But it isn't so that we have to then go in to look and see, oh, there's something intrinsically wrong, or something isn't working, or that isn't the case at all. And I hope I've managed to emphasize that by verbally explaining it, that I've tried in news to make it as clear as possible, but obviously haven't been clear. Hi, Steve. We appreciate your discussion. Having primary license and the inherent value of that, can you maybe discuss some future M&A options, DCs, open banking that could come our way? Possible timing. Okay, so, right. A very good question. Basically, the urgency that companies may have. M&A activity is always intrinsically related to an urgency. Okay, there's always something. The company that's the acquirer wants the extra revenue on their bottom line if it's a revenue generating business. The acquirer is locked out of a business that without the license or the technology that the acquired entity has, they continue to be locked out of this business, and which means they can't compete with other entities that may have already acquired a company that's positioning their competitor more favorably than themselves. So there is always an essence or an underlying motivation of urgency. So the M&A activity that I envisage where this company is concerned is when that urgency is created. Now, who creates urgency in the financial industry? Well, quite frankly, the economy creates urgency. The regulators create urgency. Central banks create urgency. And competition creates urgency. So let's just look at those four aspects. I mentioned vaguely in the front end of this conversation that central banks and regulators are starting to embrace and recognize crypto as an asset class, right? So let's just say that tomorrow morning it is fully recognized as an asset class by the Federal Reserve or Canadian federally accepts everything, all the crypto things. Well, the byproduct of that is that it's now an asset class, which means that it's exactly the same as fiat currency. Now, you're all acutely aware that in order to handle fiat currency in any way or form, to be a payment entity or to move fiat currency in any way or form, you need a license, right? And the licenses are not very easy to get, as we all experienced. So going back, and so as not to lose track of what we're discussing here, is that could be an immediate urgency on the horizon for some of these companies. Some of them could very, very quickly, to a certain extent, even overnight, wake up one morning, the asset class has been approved by the Federal Reserve or by the government of wherever they're based. And they've got to go out and try and get all these licenses that are required to be able to carry out a business that previously wasn't regulated. So for them, it's actually a dilemma that it becomes regulated, because now they've got to get regulated in terms of get the licenses that are required to be able to continue doing a business that they were doing under the radar, right? So that is the M&A essence of things like this, right? Where the urgency is created by an external force. It's created by something that comes along and changes radically the scenario, right? And usually that are, by the way, completely licensed in this sphere, but maybe not using their licenses to do what company X has been doing, but does have the ability to be able to do what company X has been doing, but now has been regulated. Well, then that projects the value of their license, of whatever it is that they possess, as extremely valuable. Because the entity in question has two options when they begin to be regulated, or when their asset class becomes regulated. They have two alternatives. Either they line up, they literally line up outside the central bank. Right? If you guys remember photos of Alfredo outside the central bank, well, imagine that line being a little longer, right? And they say, okay, well, we'd like now that you regulated our asset class, you've given us 2 months to get a license. We'd like a license. Well, good luck with that, right? I mean, good luck. We wish you the best of luck, because it took us 3 years working, almost 3 years working incessantly, and we believe at least that we're very well qualified to petition that sort of license, and it still took us 2.5, 3 years. So that is the sort of urgency that just emerges, that causes this catalyst, where these companies simply cannot wait. That they have to, by default, find a solution and find it quickly. Because of the alternative of not finding a solution and finding it quickly is being unable to operate in certain jurisdictions, because you do not have the license to be able to move the asset class, which is now being regulated, right? That's the essence of it. So your question is pointed in terms of, when do I see these M&A options already emerging. They're just slightly off the radar at the moment, because there's been no concerted effort to regulate the DCs. There's been no real concerted effort for things like the open banking. I think open banking is likely to occur in Canada, and it's just where nobody really prepares for it. It happened in Europe. It's almost identical to what I experienced personally in Europe, 2008, 2009. I was there in this particular business model, right? That it just emerged, and nobody was prepared for it. And nobody is getting prepared in Canada or in the US. Now, that's good and bad, because on one hand, the ones that have the licenses and are able to operate and have the technology, while they're few and far between, therefore their intrinsic value increases. So that's one cool aspect, right? But the other is that the regulators, the central banks, they basically got to give an opportunity to these entities to try and get licensed. So there will be an alternative, and that will be the benchmark as to what the value is of these companies that are licensed, such as us. Because if the central bank comes along and says, okay, well, we're going to do an expedited process where the maximum time for you to get licensed is 6 months, well, there are going to be companies that prefer to try and go down that avenue. But there are going to be others that don't try, because they're fully aware that there could be obstacles along the way, and they can't wait, because they'll just lose the first mover position. So invariably, the value is likely to urgency emerges. And I think the answer to your question as to when the M&A is likely to happen is you only need to look at the news. You only need to watch what's going on around you, right? Jurisdiction after jurisdiction shutting down the DCEs, them that they're going to legitimize and regulate cryptocurrencies and consider them a proper asset class similar to fiat. That is problematic because these entities got to keep moving and moving and moving, leapfrogging, going from one place to another, and that isn't a method to manage a large company or to prepare yourself for the future. So there is invariably going to be a purchase scenario, like a feast where fintechs that have licenses be acquired. What I can say, and this leads into about another question about this hypothetical value of some entities that are quoted on the exchanges that use third-party licenses. I can guarantee you that in these M&A scenarios, none of those entities will have no intrinsic value, they have no licenses, and they don't. So they'll be excluded immediately by default from this eventual M&A activity, just so that everybody's aware of it, right? They have zero intrinsic value in that type of M&A situation. Anyway, going to move on. Randy. I mean, basically, the white labels that are currently in, I can't name them, of course, but we have 3 more for send, 2 more beyond the 2 we've already put out for the DCE. We have 2 cell phone operators chatting with for a very long time concerning VIP, which is, I said it with AGM, that it just became redundant back in, when was it? Sort of February 2020. The whole thing became redundant. There's no reason to continue talking with these entities because nobody's traveling anymore. So the whole thing became redundant, but now it's coming back to importance again, of course. So we have those 2 entities. We have another entity that's very interested in VIP, unrelated to the telco industry. Where transfer is concerned, this is not launched yet, but one of the holdups that are very hard to get transfer out because we already have a couple of entities that are ready to use it in the type of businesses that I've mentioned on this call, like real estate purchases or moving large amounts of money across borders and things like that, which again, we, as you're all aware, we have the license. We're just not exploiting them yet. And that's something that this inherent value that the shareholders are not understanding is one thing is being, but not holding the license to be able to do it. And the other is being ambitious and wanting to do it. And when you do finally do it, you already have the banking license that you need to do it. And that's our situation. Which is, I think it's starkly different to a lot of these other companies, that these what I consider to be upstarts, that just, they piece together the whole situation using different agreements here and there. I think there's a stark difference between that and what we're doing. And I understand that it's not reflected yet in the SP, but I don't think the SP is everything in terms of when you're building a company of this nature. And by the way, some of these entities, and again, I don't like to draw comparisons too much, but some of these entities, like the one that I was referring to that lost half its market cap, right? That has no licenses at all, like zero. 4 years was how long the company was operating for with no revenue, like with minimal, like nothing at all, 4 years. And if I'd been the CEO of that company in those first 4 years, I'd have gone out and pursued all the proprietary licenses. That's what I would have been doing in those first 4 years. in their first 4 years, there was no revenue and there was no pursuit of direct licensing. And then all of a sudden, it all explodes and everybody's, giving them the accolades. But there is a slight difference between the two. But the reason why I mentioned the 4 years is that's almost the same period that we're in, right? The sort of 4-year gestation period from switching from one business model to another, the pivot that we took. But I think the great difference between the two is obviously the fact that we during the 4 years, beyond having built technology that's proprietary, beyond having created all the things that you're all aware of and are now being used, like, for example, Revolugroup and whatever else emerges pretty soon, is all proprietary. It's all paid for. I mean, that's one of the things people overlook. Everything, all the technology is paid for. We paid for it during those years. Is the great difference, and I keep reverting back to the same thing, and it sounds like I'm just pressing the point, but we also got all the licenses that allow us to work autonomously. So that is, you either place intrinsic value on it or you don't. I mean, that's the thing, right? So, and I understand the people who don't, but we don't share the same view, but that's not a problem. I personally place an immense amount of value on those aspects. And when M&A comes around, or when a company finally needs this type of technology and licensing, they will not be purchasing these entities that we keep being compared to, because they literally own nothing. They don't have any licensing whatsoever. So that for me is an important thing that should never be overlooked. Anyway, I'm going to move ahead. Okay, never too late. Yes, it's been a long day. I guess everybody's leaving now. So what I'm confused about is how you seem to justify that putting back. Okay. Over 12 million and okay. Okay. Again, there's misconceptions there, Randy, because you're talking about 500K, but in the same sentence, you're referring to 12 million shares or profit or something like that. But what you're overlooking is, first of all, you're blending two different periods of time into one, probably on a convenience standpoint, because it helps your narrative. But my job is to clarify. The 500K was the previous private placement. This is all there in the news, right? But before that, which is the period that you're referring to, which you brought that out of context from like 2 years previously, is there were 24 million warrants. I believe 24. Please, I may be off. Don't take every single word as gospel. I'm just broad brush recalling, right? So there were let's just say 24 million warrants out there, which were going to expire and were not likely to be taken down. And they were on our balance sheet as warrants. They were on the SETI as warrants. And so that was the primary vehicle of financing that was achieved, right? The secondary vehicle was the issuance of and taking down of options. So when you properly analyze the whole period, not dissecting up and taking 500K and saying, well, I'm using the 500K and now I'm going to use all this money taken previously, but I'm going to remove from my analysis all the options, all the warrants that you took down, all the options that you took down, all of that financing that you put in after the disbursement previously. I'll remove all that conveniently from the analysis to boil this down to an amount and then the 500K back in December 2019. That isn't helpful and it isn't constructive because it is not the true reality of what happened, right? And again, it's not for me to educate you on what happened. It's all publicly available. I think it's going to still be on SETI and still be on in news and all that stuff. It's still out there, even though we were under the other company name. When I took all those options down, all the warrants, and basically reestablished my share position back to 21 or 22 million through doing all of that, there was necessarily an investment of funds, which has been overlooked in that question that you're referring to there. Anyway, moving on to the next one. Debbie Wilton. Steve, you mentioned if you changed hosting companies, etc., the cost would double. Company you own is currently paid about 100 per year with a 3-year contract. Can you confirm the website for your cost per year if they were hosted? No, Debbie. The thing is you're mixing up the two completely different expenditures, right? The hosting company that I own, and I owned way before owning this, before being involved in this company that I'm your CEO for. Before the advent of the VIP website, which is a series of websites that I have owned since the 90s, they were operating, they were providing, you can find the history of them on Wayback Machine, you can see it. They were all linked to CarTrawler, Expedia, Hotels Combined. They were all linked to affiliate sales, travel sales, right? And they were all operational. So those websites, I've owned them from the 90s. You can see, all you have to do is go to whois.sc and just put in the name of one of them, and you'll see it's like from 1997. So I bought like all those websites back in 1997. This is when websites, by the way, .com was like $43, if you recall, if you were even around then, 1997. So it wasn't today's price. It was $47. So I bought like 150 domain names for $47. Let me just look at that for you. So it's 150 times 47. So it's $7,550. Let me just look now. Hold on. Don't want to lose track of this. No, sorry, $6,450 was the cost the first year of registration at $43 website, which is what they cost in the 90s, of those websites. So push that forward. I do appreciate that. I think towards 2005, 2006, domain names started coming down in cost to quite a small amount, maybe $15 a month or something like that. So it's not possible to project forward the 6,000 through the 20 odd years, right? But let's just say that it was 6,400 for the first 10 years. That's 64,000 plus the development, plus the websites and all the rest of it. So I had quite a significant amount of money, and those websites were generating for me at least annually anything between $90,000 and $160,000 on affiliate commissions that were being paid directly in his bank account, my company's bank account, right? So this whole concept that I had these worthless websites and just sort of sold them, leased them to the company and whatever, is a fallacy. And all you have to do is go to Wayback Machine, look at the website, see it was completely different, but it was still functional. It had all of the affiliate links to Hotels Combined, Car Trawler, Expedia, flights with Flight, I forget the name, Flight Center or something like that. So you'd go on those websites and you just click, and every time you bought something, right, I'd get a commission. Okay, and I just set this up back in the 90s. It was just a hobby, basically. I had other businesses, and that was set up and it was operational. So I'm making this money. So when we start wanting to push Travolution into worldwide travel and create what is today Revolugroup VIP, so when we go down that avenue, then the most logical step was that all of these VIP websites be part of this structure, so that we can obviously get the more visitors to them and create this structure that I'd conceived back in the 90s. So a decision was made. In my case, was simply, well, listen, this is what I'm making on average over the last 10 years from these websites. I don't want any more or any less, but that's so. If you go back to the months before the websites were eventually leased,
I mean, are you intoxicated?
there was an external
like 3 times.
And this is all in the news. There was an external company, Debbie, that came in, valued those domains, valued the money that I was making on those domains for 10 previous years, and came to the conclusion that the cost for these domain names on a yearly basis should be this in the beginning and 5% more per year. This is an external company that comes in and values these domain names. Okay? So this whole concept that I would just hand over these domain names that were making me over $100,000 a year to the company, so that we can create this Revolugroup VIP system, isn't workable. Because why would I do it if I was being paid every single year over $100,000 from these various affiliate operators? It wouldn't make any sense, right? So this is a very similar situation and confusion. So you're mixing together the fact that my hosting company, which has got nothing to do with this VIP thing, by the way, my hosting company, ever since I took over this company, from the very first day I took over this company, the first 6 months in my role in this company, I spent them in Vancouver, BC. Okay? And I was inside that office in Vancouver, BC, with a hatchet, cutting all the contracts, all the superfluous money that was being spent from the mining days, ending agreements, and just fine-tuning all of the expenditures that this company had, which is what any CEO does when he first takes over a company, right? So as we progressed along, obviously, the company's acquired a travel company that's got 634 websites or something like that are being hosted, and they've got webmasters hosting 4 separate individually owned servers, 2 T1 connections, right? And a myriad of technical backup that keeps all of this travel business that made this public company millions of dollars in the first few years that after the acquisition of Travolution. Look at the finances, millions of dollars a year in travel sales. Well, the concept that these websites and this back office system and all of the online payments just materialized without any hosting or any webmaster support or whatever is obviously a joke, right? I mean, obviously somebody was taking care of all of this. Well, who was taking care of it was my company that I own, which is a hosting company that was giving the public company the deal on the hosting services for all of the travel websites with the webmasters and everything. That's what I was referring to as being half price compared to prices that we did actually obtain from Canadian companies. We actually went out and tried because I just got tired of everybody saying what's being said to me on this particular on this particular conversation today. Just a complete misunderstanding of what we're discussing, and that is back in 2016 and 2017, Travolution used my company for hosting of websites. These were not the VIP websites. The VIP websites came almost 3 years later. Okay, so or at least 2.5 years later. So the 100K you're referring to, which is the VIP website, has nothing to do with the hosting, web renewal, domain renewal, and all the technical services that sustain functioning the Travolution travel websites, which are like 600 websites. That service is one entity, one cost that would continue. So if I decide not to renew the contract on the Revolugroup VIP websites, okay, all that will happen is you look at my supposed salary and you'll see $100 and I think it's $11,000 less that year, okay? But if you go back a few years before and you know, because you have the financial data, you'll see that my salary has never changed, and the only difference is between my salary and what it is that my companies provide as a service in terms of the company, and they do it obviously for much less than it's been able to be achieved from elsewhere, and that's the situation that we're dealing with, and I guess that's why we get this confusion about you've increased your salary, but I have not increased my salary at all, and basically, if the company utilizes more, for example, this Revolugroup VIP, the websites that were being created since the travel days. I hope you're all aware that they're all hosted on servers that are owned by my private company. And on the same servers that were previously being paid for the travel industry. So those new websites don't actually cost any more money because I own the servers, and therefore they're already being paid for by the company. So there's no hosting cost, if you like, or no increased hosting cost for those things. Anyway, I belabored that point far too much, and I hope that I've clarified that there is a massive difference between those two concepts that you're dealing with. No, it's not me who responds, Randy, to IR. Anyway, it's 4:30, which means that this has gone on for 3 hours and 32. Yeah, I mean, Harvinder, there's no reason why it wouldn't launch. As I've tried to explain, as far as I'm concerned, the white labels that are pending to be launched, to put it into simple terms for you, Harvinder, is as far as I'm concerned, they should have been launched yesterday, right? That's the simplest way I can explain it to you. There is nothing pending from our side. There's nothing wrong with the technology. Everything is prepared to start. Everything works, as you can see. Revolugroup works. And we've already put out news telling you as a shareholder and everybody else that the white label has been approved and it functions. That there is nothing wrong with the white label, right? Now, the point of question is, so when will the DCE partners launch their white label? And the important thing to underline there is their white label, right? Because it's theirs, not ours. We provide the technology. We provide the banking licenses, right? We provide everything that allows that to function. We have it in writing from them that the technology works, functions, and they're happy with it. There's no problems, right? So they have it, and so that being said, Javier, let's just say we wake up tomorrow morning and it's launched. That would not be surprising to me, right? I'm not saying it will transpire like that, but it would not surprise me because there is absolutely no reason this day, while we're discussing this, while you're sending them questions and I'm answering verbally, why those white labels have not been launched. There is no reason, no underlying reason, no motive. There's nothing wrong with these white labels. So I hope I've been as clear as possible, but trying to answer your question in a different way so that it's clearer. Okay. Now, what's the next one? Okay, so Ring Hesham. So going to do fiat to crypto as well. Then it makes me wonder now, when the DCEs are in need of getting their licenses as crypto become assets, that instead of only white label to those entities, why aren't we pursuing a partnership as in either buying up or merger with DCE in addition to white label other DCs? They come at any prices, even Canadian. They come at any prices, even Canadian. Okay, so we don't have any aspirations to create a crypto trading platform, right? So, and we don't have any to go out and purchase a crypto trading platform. So your question there seems to center around, so why don't we get involved? I hope I've understood. So why don't we get involved in the DCE business? Why don't we just do our own thing? Which, it isn't unreasonable. We've looked at it in the past. As you know, we looked at it with the Atos deal. We were going to do crypto mining, which would have easily given us the ability to create the platform, the trading platform. As you know, we have Danielle, who works with us, who has the secure mechanism, the Ash wallet. We have all the components to be able to put together a very, very good DCE, not only on a programming basis, but also with obviously the security that it's our banking license that backs it all up. But we don't. It's pointless trying to be a jack of all trades. We're already the jack of one trade, right? And that is, we have all the licenses, right? And sorry, that's a British term. I don't know if you use that in Canada, jack of all trades, but that's it basically means that we do everything, right? And in that particular area, I don't think we should reinvent the wheel. I think that if we went into, as you're suggesting, we started getting involved. This was actually a decision that I made maybe 2 or 3 years ago now, because I realized that if we started getting involved in their territory, right? So let's look at this like warfare, right? So we start getting involved in their territory. We start creating a crypto exchange. We start using Daniel Hernandez's company to do the security. We'd start using the Atos servers if we had launched that business, and we start playing around in their territory, right? Then we become an enemy, you see. And if we become an enemy, not an enemy, but a rival, let's call it a rival, not an enemy. That was the wrong word to use. Then it makes it really, really difficult for them to embrace us for the banking technology, because obviously, they'd be opening their clients to us, and we now have a crypto exchange that sort of competes with them, right? So I've always seen that as incompatible, right? You either do one thing or you do the other, right? Don't try and do both, because if you try and do both in that particular sphere, you lose the trust, because nobody's going to do a white label with you. It's as simple as that. It's just, it's contrary to logic, right? So while your point is valid, why don't we just go out and do it? And I hope that I've understood the point, by the way. I think that we would not be in the situation we find ourselves in now had we ventured into their territory, started getting involved in what they're doing. I think the fact that we're inoffensive in terms of not being involved specifically in what they do and just handling the financial side with the tech backup is more convenient for an eventual harmonious relationship, we could call it, right? Let me see what else you've asked. So that we own the trading platform and being the bank, just like the strategy with Revolugroup. Exactly. Well, all right. Okay. So yeah, you're just leading on to the same concept, really. But there's a huge difference with Revolugroup and the DCEs, right? And I'll tell you what the difference is. With Revolugroup, the territory isn't occupied, right? The area that we want to be involved in, we can get the technology and we can launch by ourselves, and we're not particularly interested in providing the technology to, when I say technology, the banking technology to the third parties at this juncture. We're very, very similar to what we've done with the verticals. We're going to create our own betting platform. We're going to connect our banking license to it, so we are the front and the back end of that particular system, and we're going to show it, right? Just like the trade show. This is us. We're the bank, and we're also the betting platform. And I think that again, it's all white label at the end of the day. Let's just say that it's now legal in Canada tomorrow to have the sports betting. Who would you rather sign with if you wanted to set up a sport betting platform? The company that can give you the technology and the bank, or the company that can just give you the technology, or just the bank? Which would you sign with? You'd sign with the one that gives you the whole package, right? So, I envisage white labels coming out which may focus on certain sports or certain events and things like that. And the ease of use with our type of platform is you have no headache with where the money is concerned, because the bank that is behind the platform is owned by your partner, right? So that unto itself should not be overlooked as an inherent value. It is a tremendously high value, and you only realize that it's a high value when you actually go out there and try and find a bank account the day after it's federally approved for sports betting in Canada, right? You go out and try and find a bank account. And I bet you that the big six, as so they're called, right, that none of them are receptive to the business, because that's just the way that they operate, right? And so it ends up being stifled. I mean, the same thing happened with the marijuana market. Do you not recall? Do you all not recall? Right? So marijuana is approved. Everybody's ecstatic. Stocks going through the roof. Yet nobody wants to provide these companies with a means by which they can charge for their product. In the beginning, I'm referring to, right? So none of the credit card processors wanted to deal with it. None of the banks wanted to be involved in it. That's what happened. I'm not saying that's what happened today, right now. That may have changed. It probably has. But in the beginning, there was a period of time, a year and a half. Now, if you're trying to start a business and you can't get banking and you can't get a method to charge something, then you don't have a business. No matter how great an entrepreneur you are, if you don't have a means to charge the product that you've just invented that you want to sell, then you don't have a business. And so the situation with us is this angle of us having the licensing to be able to be involved in sports betting the following morning, I see that as a huge, enormous advantage. That's just me. I mean, it's my opinion, right? People are not considering what's going to happen the following morning. The world thinks, or at least Canada thinks, that it's approved federally on Monday morning, and on Tuesday morning, people walk in with the federal law in one hand, walk into BMO, into RBC, and say, hey, look, this is now legal. We want to open a bank account to be able to process payments for betting. Well, good luck. You will see. I'm just surmising because of experience. I'm just giving you my experience, what I think will happen, right? I don't think they'll be receptive to these new bank accounts. I think there'll be a period of time where it's cool and the federal law hasn't yet been properly understood, and there's a lot of risk, and they're not going to open the bank accounts, and so that's going to thrust us into a situation where we have both sides of the coin. When I say both sides of the coin, I mean we have the betting and the bank both together. Thanks for your time, Steve. Yeah, fantastic. Yeah, good chatting with you, Randy, too. Yeah, JT, hopefully you sleep well tonight, Mr. Harvinder. Steve, you need to conclude this meeting. Recording is about max 5. Okay, all right, Sean. Okay, so thank you for your time, Steve. Happy hour now. Take care. Many thanks for your time. Okay, thanks. Right, there's no more questions, so I'm probably speaking to myself for the last 20 minutes. But anyway, guys, it's been great bringing you all up to speed, and thank you very much for attending the meeting. And I shall get back to work. So take care. Good night, everybody.